Oil and water do not mix, but politics and oil bond very well. There is no official transcript of the conversation between the US president and the Saudi crown prince, which resulted in Saudi Arabia's latest oil production cut. Reports suggest President Donald Trump told Mohammed bin Salman that US forces stationed in the kingdom could be withdrawn if Saudi Arabia did not stop flooding the market with cheap crude. Within days, Riyadh announced production cuts and ended its oil price war with Russia. OPEC and G20 members, including Kuwait and Norway, have already announced cuts in output. But questions still remain over compliance. The US president has taken credit for the nearly 10 million barrel cut by oil producers, which comes into effect on Friday.
I think I got them to cut maybe, what would you say? I would say, well, they say 10 million, but I think it's 15 million barrels. I even heard 20 million.
Saudi Arabia and Russia's failure to agree on price stabilization led to a 31-day price war, which has resulted in a massive oversupply of crude. That, combined with the coronavirus shutdown of the world's major economies, provided a perfect storm. For the first time in history, traders were paying to get rid of oil stocks after storage ran out, and US crude futures dipped to a record minus $40 a barrel. The International Energy Agency estimates global storage capacity could be full by mid-June. With a powerful lobby and nearly 1 million US hydrocarbon sector jobs at stake, it's now an issue of national security for the United States.
We're also exploring potentially having the ability to store another several 100 million barrels. So we're looking at lots of different options. We're in touch with lots of people around the world, and the President is determined that we protect the national security interest and the job.
With flights grounded, no one driving, and factories closed, analysts estimate the demand gap is in excess of 30 million barrels. Even though some restrictions are slowly being lifted, the energy market is gloomy. On positive projections, international oil price is estimated to average around $35 a barrel, while the US price is expected below $20, a drop of 60% compared to last year. Major firms such as Royal Dutch Shell are readjusting. Shell cut its dividend for the first time since World War II. Norway, Western Europe's biggest oil and natural gas producer, wants to ease tax rules for oil firms to prevent a drop in investment. There is the short-term benefit for oil consumers. The European Central Bank says inflation has declined due to the sharp fall in oil prices. But slowing growth, global job losses, and declining industry, coupled with falling oil production, doesn't bode well for the global economy. Osama bin Javaid, Al Jazeera.